Hey, it's Christopher Holmes here again with Scottsdale Mortgage Advisors. I thought I would address what the Fed or the Federal Reserve is planning on doing today with increasing the federal funds rate. The expectation is that we're going to see a 0.25% increase to the federal funds rate. So the question for us in the mortgage business and for our clients is how is that going to affect interest rates for today? What's interesting is the reason that the Fed increases the federal funds rate, which is the interest rate that banks lend each other overnight to meet their requirements, their reserve requirements. But the reason that they increase it is to try to get inflation under control, which seems to be working so far. They've increased it 10 times up until now. This we expect to be the 11th increase in the federal funds rate. What typically happens when the Fed does that is that we see a slight reduction in mortgage interest rates over the next couple of days. And based on what I'm looking at the market here and tracking it, it looks like we're pretty stable for today. We're not seeing mortgage interest rates. They don't go up, and the Fed doesn't control mortgage rates. But the fact that inflation has been a bit out of control for the last couple of years is why the Fed has been increasing the federal funds rate. So there's not a direct correlation between an increase in the federal funds rate by the Fed, who meets every 6 weeks, and mortgage interest rates. Now, what we're hoping is that the net effect of the increase in the federal funds rate will stave off inflation and we'll start to see interest rates come down again. What we're really hoping is that as we get into next year, especially towards the second quarter of next year, that we'll see the Federal Reserve start to lower the federal funds rate. That basically meaning they feel comfortable that we've avoided recession and that interest rates for mortgages will start to come down again. At that point, we'll be refinancing everybody we did loans for over the last couple of years in the sixes and even in the 7% ranges. And that'll be really good for certainly for our business and for our clients. If you have any other questions on that, feel free to reach out. I'd like to be as available as possible. My cell number is 602 525 9593. Thanks so much. Bye bye.